The Subcommittee on Housing and Insurance will come to order. Today's hearing is entitled Flood Insurance Reform, a Community Perspective. Without objection, the chair is authorized to declare a recess of the subcommittee at any time. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. Without objection, members of the full committee who are not members of this subcommittee may participate in today's hearing for the purpose of making an opening statement and questioning the witnesses. The chair now recognizes himself for an opening statement for 3 minutes. I want to welcome our members, witnesses, and audience to the Housing and Insurance Subcommittee's second hearing in as many weeks on the National Flood Insurance Program. Last Thursday, we had a productive discussion with Roy Wright to get FEMA's perspective on the NFIP. Today, we will get a community perspective. We are joined by 4 great witnesses, each of whom comes with a different set of experience and expertise. In what 60 Minutes dubbed the storm after the storm, more than 140,000 NFIP policyholders who submitted flood claims due to damages caused by Superstorm Sandy were told by FEMA that they could have their claim files reviewed. FEMA's unprecedented Sandy claims review process was prompted at least in part by a federal judge's finding of reprehensible gamesmanship by a professional engineering company that may be widespread. As a result of the claims review process, and with legal help of people like Melissa Luckman, nearly 82% of the claims closed by FEMA received additional payment of nearly $185 million. I look forward to hearing from Ms. Luckman about the process and ways that Congress can help avoid situations like this from ever happening again in the future. I also look forward to hearing from Mr. Terchunian, who has decades of experience in coastal hazard area management and coastal property protection on Long Island, which was also hit especially hard by Superstorm Sandy. I hope that he and Mr. Berginnis can share their views on floodplain management and mitigation, which we know from last week's hearing can save taxpayers $4 for every $1 of investment. Finally, we need to look beyond the NFIP monopoly to a robust private market that can better serve communities through competitive rates and services. Mr. Hec's company is the largest writer of private insurance in the country, and we'll be looking to him to share his views on how to do just that. I now recognize the gentleman from Missouri, the ranking member, Mr. Cleaver, for 5 minutes.
Thank you, Mr. Chairman. Late last week, we held a hearing on FEMA's perspective on the National Flood Insurance Program, gaining, I think, some important insight from Mr. Roy Wright. I would encourage the committee to continue engaging with FEMA as we move forward towards flood insurance reauthorization. This is especially important as the President's fiscal year 18 budget contains significant cuts and changes to FEMA. It is extremely disappointing to see that the President's budget would eliminate discretionary funding for FEMA's mapping and mitigation activities. If anything, we should be increasing congressional support for these vital activities. Today, we will hear the community's perspective on the NFIP, giving us a broader understanding of the challenges facing the program and the areas in need of improvement. Following Superstorm Sandy, which resulted in $65 billion in damages, allegations began to surface regarding the underpayment of policyholder claims, fraud, and altered engineering reports. As homeowners slowly recovered from Sandy, we must continue to hold those who did wrong accountable for their actions. Now, I am extremely encouraged that this committee is working and is committed to working on NFIP reauthorization. And as this discussion continues, we must do so with a goal of ensuring affordability of flood insurance premiums for our constituents. The program does us little good if consumers are priced out of the market and priced out of homes. I'd like to yield the last minute to the gentleman from California.
I thank the ranking member. I just want to join with him in my concern about this idea of cutting the budget for the mapping program. The idea that mapping is not an appropriate federal government expenditure would come as news to Thomas Jefferson, who sent Meriwether Lewis and William Clark to map the Louisiana Purchase. If it was a good expenditure of federal funds then, and I think it is a good expenditure that benefits all Americans. If your home isn't on the map, that's also useful information. But more importantly, the mapping process, the insurance process, is designed to reduce the future supplemental appropriations when we have the next disaster. And with global warming, there will be more weather disasters and flood disasters. So if we can have an effective flood insurance program that starts with mapping, we can avoid the huge supplemental appropriations. And so many members come and pound the table and say the federal government shouldn't be subsidizing, shouldn't be doing, and yet I see them on the floor when we have a real disaster and millions of Americans are uninsured, and they're voting for the supplemental appropriation, as we all do, because we all have a heart. I yield back.
The gentleman yields back. The chair now recognizes the gentleman from Florida, Mr. Ross, the vice chairman of this committee, for 2 minutes.
Thank you, Chairman, and thank you for calling this important hearing. As we continue our efforts to reauthorize and reform the National Flood Insurance Program before September 30, 2017, we have a lot on our plate, and we're glad that you're here to help us try to solve some of these issues. The NFIP provides flood insurance coverage to more than 5 million policyholders across the nation. At the same time, it faces serious financial challenges as it is nearing $25 billion in debt. As a result, the GAO, the Government Accountability Office, has considered the program to be a high risk since 2006. Damage from flooding has become more frequent and more severe over the past 2 decades despite the NFIP floodplain management efforts. Also, homeowners with NFIP policies have been left with more questions than answers about how their families can rebuild and recover from recent catastrophic storms. As this committee and Congress as a whole moves forward with flood insurance reforms, we must do so with homeowners in mind across the country. Severe storms transcend the typical partisan divisions we see on Capitol Hill. On this issue, Congress must move beyond political differences and put forward critical NFIP reforms to protect taxpayers and improve the program now and very definitely for the future. As a member of Congress from Florida, I'm committed to ensuring property owners have uninterrupted access to affordable flood insurance products, which allows them to recover from devastating storms more quickly. I am also committed to ensuring homeowners and communities have opportunities to mitigate against flood risk prior to a disastrous weather event. Mitigation is one of the best avenues that we can pursue. Thank you again, Mr. Chairman, for calling this important hearing, and I'm excited about this opportunity to receive testimony from this diverse panel of witnesses, and I yield back the balance of my time.
The gentleman yields back. We now welcome our witnesses, our panel today. For introductions, first we have Ms. Melissa Luckman. Ms. Luckman is the director of the Toro Law Center's Disaster Relief Clinic, which provides pro bono legal services to Sandy victims. For over 4 years, Ms. Luckman has been assisting homeowners navigate the NFIP claims process, seeing the program from the perspective of the policyholder. The Law Center has helped put over $2.3 million back into the Long Island community as a result of their work. I now recognize the gentleman from New York, Mr. Zeldin, for the introduction of Mr. Terchunian.
Thank you, Mr. Chairman. It is my pleasure to introduce to the Housing and Insurance Subcommittee today Mr. Aram Terchunian. He is a resident of New York's 1st Congressional District and has over 30 years of experience in storm mitigation and coastal restoration work. His company, First Coastal, deals with the NFIP on a daily basis, helping homeowners navigate the complicated process and red tape they face when seeking an improvement in their premiums after an investment has been made to elevate a home or take other steps to protect a property. He's also the Wildlife Commissioner of the Village of West Hampton Dunes, a coastal community where storm mitigation is a top priority, and many homeowners rely on the National Flood Insurance Program. I thank Aram for being here today to share his experience and perspective with our subcommittee on this important topic, and I yield back.
And for our next witness, Mr. Chad Berginnis, the Executive Director of the Association of State Flood Plan Managers, also from the great state of Wisconsin. With nearly 25 years of experience, he is a nationally recognized expert in natural hazard management, flood loss reduction, and land use planning at the state, local, and private sector level. Welcome. I now want to recognize Mr. Ross, our Vice Chairman, for the introduction of Mr. Hec.
Thank you, Mr. Chairman, and it's my pleasure to introduce to the Housing and Insurance Subcommittee Mr. Evan Hec, the founder and CEO of the Flood Insurance Agency, which is based in Gainesville, Florida. They wrote their first private flood insurance policy in our state on October 24th, 2013. Today they have over 3,285 active private flood market policies in Florida. Visiting your company's website, I am very impressed with the positive response your flood insurance policies have received. Florida homeowners deserve more choices when it comes to flood insurance. I'm excited for this subcommittee to receive your testimony and for you to be able to provide a perspective outlining the unique needs of our state and the benefits homeowners can receive from an increase in private flood options. Thank you, Mr. Hec, for joining us, and I yield back the balance of my time.
The gentleman kneels back. Now, the witnesses will now be recognized for 5 minutes to give an oral presentation of their testimony. Without objection, the witnesses' written statements will be made part of the record following their oral remarks. Once the witnesses have finished presenting their testimony, each member of the subcommittee will have 5 minutes within which to ask the panel questions. On your table, there are 3 lights. Green means go, yellow means you have 1 minute left, and red means your time is up. The microphones are sensitive. Please make sure that you're speaking directly into them. With that, Ms. Luckman, you are now recognized for 5 minutes for your oral presentation.
Good afternoon, Chairman Duffy, Ranking Member Cleaver, and members of the subcommittee. My name is Melissa Luckman. I'm the director of the Toro Law Center Disaster Relief Clinic. While we assist homeowners with various categories of assistance, flood insurance has always been our primary focus. I want to thank you for the opportunity to testify about the National Flood Insurance Program and to provide suggestions for reform as we quickly approach the September 2017 expiration of this program. To date, we have spoken with over 5,000 households and represented over 1,400 homeowners with various Sandy issues. We have provided assistance to homeowners with supplemental insurance claims, flood insurance appeals, flood insurance litigation, and most recently, assistance with the FEMA Sandy claims review process. First and foremost, I would like to state that I do believe that the NFIP should be reauthorized as it provides a valuable subsidized flood insurance policy to thousands of homeowners in the United States. However, there must be significant reform to ensure the program functions in a more efficient manner than it does today. The greatest lesson learned from my involvement with flood insurance claims is a simple concept of getting it right from the start. It is imperative that we shift our focus from reactive response to proactive education to ensure a full and complete recovery to create a more sustainable future not only for our country, but also for the National Flood Insurance Program. My proposals for reauthorization are as follows. First, I believe there should be a standardized requirement of education and certification for all actors connected to an NFIP policy, which would include WIO staff adjusters, independent adjusters, engineers, as well as sales agents. Standardization and continued educational requirements for all actors engaged would implement quality control and among those participating in the NFIP. Next, I believe there needs to be additional requirements of policyholder acknowledgement and inspection at the inception of an NFIP policy. In the wake of Sandy, policyholders voiced a host of complaints with regard to their flood insurance coverage. Those most commonly expressed were that they carried a structure policy of $250,000 when they didn't have a mortgage or a mortgage of under that amount, that they believed that they had contents coverage, which they had not actually had, and they were not aware of the limitations on basement coverage. Quite often, policyholders who could barely afford their premiums felt the cost was not worth the coverage. A simple solution to these issues is a requirement that all NFIP policies be accompanied by an acknowledgement which must be executed by the policyholder and the sales agent at the inception of a policy which speaks to these issues. I also believe that there's a necessity for a baseline photographic inspection which should take place at the inception of an NFIP policy. Similar to the issuance of a homeowner's insurance policy, there should be the requirement of a photographic inspection completed for the property for which flood insurance is being sought to ensure that the information set forth in the application is correct. With regard to the claims and appeals process, I have proposed 5 reforms in my written record, but would like to discuss 2 here today. First, I believe a policyholder should be advised in advance who the adjusting and engineering companies will be who will be assigned to their claim. Thereafter, the homeowner should be afforded a reasonable opportunity to research and investigate that company with the option to veto and request another company be reassigned. Second, I believe that the appeals process should be handled by a neutral arbitrator who is not employed by FEMA. With regard to mitigation and the increased cost of compliance, Post-Sandy, we saw two items that homeowners struggled with the most, and that's the cost of accessibility post-elevation and additional costs policyholders face when complying with local building code. I believe that these are two very important items that policyholders need for recovery, which could potentially be covered under ICC coverage without the trigger of substantial damage. The hot topic post-Sandy, of course, was litigation costs and who covers those costs. I do believe that policyholders who act in good faith through the submission of a claim, throughout the appeals process, and are forced to pursue litigation should be compensated with reimbursement of legal fees. I have reviewed the recently introduced legislation by Congresswoman Velasquez, and I believe that Congress should pass this legislation or adopt many of these ideas into the final reauthorization bill. That bill and my proposals here today are common sense reform which will lead to a stronger and more cost-effective NFIP. To summarize my comments here today, getting it right from the start is the key which will allow a quicker and stronger recovery as well as a more resilient future.
Thank you, Ms. Luckman. The chair now recognizes Mr. Terchunian for 5 minutes. You need to turn your microphone on. You might just want to pull it up to your mouth there.
Good afternoon. My name is Aram Terchunian. For 35 years, I've been helping people identify coastal risk, mitigate coastal risk, and recover and adapt when risk becomes reality. Thank you to Chairman Duffy, Ranking Member Cleaver, my Congressman Lee Zeldin, and the subcommittee for this opportunity to speak on the topic of flood insurance reforms. Congressman Zeldin has been a true leader in working with our communities and the U.S. Army Corps of Engineers to help to mitigate against future disasters. The NFIP has helped save lives, properties, and resources through a classic carrot and stick program of incentives and regulations. However, changing technology, science, and policy have created new opportunities to improve that system. In a nutshell, newer buildings that are constructed and maintained to the NFIP standards and ICC building codes are experiencing far less flooding damage than older legacy homes that do not meet present standards. Moreover, those areas protected by well-designed, built, and maintained flood risk reduction projects, such as beach and dune restoration, experience significantly less damage during extreme events. The goal, in my opinion, is to decrease the number of pre-firm substandard structures and increase flood protection and resiliency projects. West Hampton Dunes is a small 2-mile village on the barrier island of Long Island.
Mr. Chairman, could we get him to speak more into the microphone? Kind of.
In
If you just pull your
1992
microphone, actually direct it at you, you can move it around. There we go.
Thank you. In 1992, a coastal storm pierced the island, creating a 1-mile inlet and destroying almost 300 homes. At the time, West Hampton Dunes was used as the poster child for how to mismanage a beach. Today, this humble community is the blueprint for coastal management and flood insurance modernization. It is a net economic generator to the local, regional, and national economy, as well as the NFIP premium pool. The barrier island was rebuilt through a beach and dune project engineered and supervised by the U.S. Army Corps of Engineers. The village then embarked upon an aggressive program of sand fencing and beachgrass planting that increased the dune. The village also implemented zoning measures that allowed property owners to build as much as 4 feet above the NFIP 100-year flood level without a zoning variance. In the 22 years since the project was constructed, there have been 0 houses lost and only minimal flood damage claims even after Superstorm Sandy. This is an example of how integrating flood protection projects with locally implemented NFIP and zoning regulations and locally driven beach and dune enhancements have resulted in a resilient community that is a net benefit to the NFIP. Conversely, surrounding communities that did not have an engineered flood protection project and were populated by a substantial number of pre-firm buildings suffered terribly during Sandy. The human anguish in these areas exceeded even the substantial flood insurance, infrastructure, and natural resource losses. Local communities are incentivized if they can provide increased flood and erosion protection to their community at minimal cost. However, many communities do not have the technical staff to prepare and review the community rating system applications. Aid to those communities and simplifying the CRS application process would benefit many policyholders at a small cost. Rewarding communities that streamline permitting under local zoning code when complying with NFIP flood mapping removes a tremendous cost and time impediment for homeowners. Pre-disaster mitigation planning is not being transformed into mitigation projects because of a lack of funds. The effect of recent premium increases is disproportionately impacting middle and lower income families. The payback period to raise an existing pre-firm home into compliance is too long. As a result, homeowners do not elevate their homes before experiencing flood damage. Post-disaster programs, such as the increased cost of compliance coverage, is insufficient to elevate a typical home on Long Island, where costs run up to $200,000 and the program maximum is $30,000. Simply stated, we must convert more pre-firm homes to NFIP-compliant homes faster, and policyholders are the key to the process. Homeowners will elevate and flood-proof their homes before the flood if it is in their immediate financial interest. The financial stick of increased premiums without a commensurate financial carrot will not work. It is not reasonable to expect a consumer to invest up to $200,000 for an annual payback of $4,000 to $5,000. In summary, the NFIP plays a critical role in protecting the citizens of our nation. Thank you very much.
Thank you. The chair now recognizes Mr. Berginnis for 5 minutes.
Thank you, Chairman Duffy, Ranking Member Cleaver, and members of the subcommittee for holding this important hearing and inviting the Association of State Floodplain Managers to testify. I am Chad Berginnis, Executive Director of ASFPM, whose 17,000 members include many of the boots-on-the-ground state and local officials that implement the NFIP. I'll begin by saying that the NFIP is the nation's most widely implemented flood risk management program. In fact, I wish it almost had a different name because it works to reduce risk in 4 important ways: making publicly available mapping to show risk areas, community adoption and enforcement of flood risk reduction standards, risk-reducing mitigation of existing at-risk structures, and finally, the sale of flood insurance. The program benefits not only policyholders, but the public and communities. For example, buildings compliant with NFIP standards result in nearly $2 billion a year in losses avoided nationally. The 1.2 million miles of flood mapping in the country allow not only policyholders, but citizens, emergency managers, planners, public works officials, and others to know the flood risks in their areas and take action to reduce those risks. Mitigation programs, increased cost of compliance, and flood mitigation assistance are cost-effective, resulting in $5 in benefits for every $1 invested, and have provided $1.3 billion in mitigation funds for reducing risk to thousands of structures since 1997. These measures not only help individual property owners, but strengthen neighborhoods, communities, and reduce blight. I say all of this to convince you that this nearly 50-year-old program has very important benefits that serve taxpayers and policyholders alike. Our written testimony offers 20 specific reform ideas, and for the balance of my testimony, I want to highlight 4 of the areas that are most important to ASFPM. First is to deal with the debt, and not only the current debt, but also to create long-term solutions to ensure that we effectively deal with catastrophic events in the future. Second is to reaffirm the commitment and enhance the flood mapping program. One of the most critical and important elements of the 2012 Biggert-Waters Reform Act was the authorization of the National Flood Mapping Program. It was the absolute right policy, yet we've not yet finished the job of mapping the country. Chairman Duffy, many of the flood maps in your rural district are not modernized. The problem is that the priorities of the mapping program to date have been to map existing at-risk areas. As a result, mapping never gets ahead of development while these areas are still cornfields, and instead sets up a dynamic that makes everybody mad. Development occurs, the floodplain is put on an area by FEMA, and everybody down the line, from property owners to realtors to local officials, are upset because they are now not only in the floodplain, but have to deal with flood insurance standards after the fact. We still have 2.3 million miles of unmapped stream, rivers, and coastlines in the United States, many residual risk areas that are not mapped, and some mapping information that is not publicly available. We must do better and need your help. Third is to strengthen the mitigation components of the NFIP and to use them more often in a pre-disaster setting. This is particularly true with increased cost of compliance. Additionally, ICC should be expanded in application and scope, including raising the maximum ICC amount and clarifying that it is available in addition to the maximum claim amount. Finally, ASFPM believes there are reforms needed related to private insurance and that they should be focused on ensuring that other elements of the NFIP are not weakened and that the NFIP and private flood are on equal playing field, and that through competition and cooperation, we grow the overall policy base. To this end, there are two critical reforms. The first is a requirement that all private policies sold to meet the mandatory purchase requirement of the NFIP include an equivalency fee that is equal to the federal policy fee on NFIP policies. Currently, this fee pays for 100% of the floodplain management in the NFIP and roughly 50% of the mapping budget. If the NFIP ultimately loses policies due to competition, there will be fewer resources to help communities and states with floodplain management and mapping. Second is a requirement that private flood insurance policies meet mandatory purchase requirement only be sold in NFIP participating communities. Currently, most communities in the country participate in the NFIP. So while the private market is in the early stages, let's enlist private industry to be partners to encourage communities to stay in the program. Because our members have enrolled nearly all of the 22,000 communities in the NFIP, we uniquely understand their reasons for joining. The primary reason is accessibility to flood insurance. ASFPM fears that if private flood insurance is available with no requirement to join the NFIP, communities could drop out of the program. Thank you for listening to our concerns, and we'll be happy to answer any questions.
Thank you. The chair now recognizes Mr. Hec for 5 minutes.
Thank you, Chairman Duffy, Ranking Member Cleaver, and members of the subcommittee. My name is Evan Hec. I am the CEO of the Flood Insurance Agency. Thank you for this opportunity to testify. The mission statement of my company is to provide affordable flood insurance to the maximum number of property owners and business owners in the United States. We have been an active marketing participant of the Write Your Own National Flood Insurance Program for almost 30 years. For the past 3.5 years, we have underwritten and distributed private market flood, an alternative to FEMA flood insurance. We are one of the largest, if not the largest, writer of private flood insurance currently in the United States, providing over $3.5 billion of property coverage to more than 18,500 consumers. Private flood insurance alternatives to FEMA's NFIP have now become commonplace. They first became available simultaneously with the unintended consequences of the Biggert-Waters Flood Insurance Reform Act in October of 2013. Our company is just one private market provider, and every day we renew a previously written policy every 6 minutes. We write a new policy every 10 minutes. The general public's knowledge of the existence of alternatives to the NFIP is readily evidenced considering a unique user visits our website every 52 seconds. While it is understandable that some might believe the private market would only want to write FEMA's best risks and leave all the poor risks in the NFIP, from our point of view, almost exactly the opposite is taking place. Nearly all of our 18,500 risks were FEMA-subsidized policies. The policies FEMA believes are 45 to 50% underpriced. Our risk selection is based on reports from the GAO to Congress summarizing total premiums received and claims paid from 1978 to 2011, comparing actuarial results to subsidized results. The subsidized premium increases over the past 10 years have far outpaced the actuarial premium increases during the same time period. I have provided 3 examples of actual rate increases. An actuarially rated policy for a property in California has increased 65% over 12 years, while a subsidized rated policy written in Illinois has increased 153% over 11 years, and another subsidized rated policy written in Louisiana has increased 285% over 10 years. All of our 18,500 private market flood policies are written with Lexington Insurance Company, a member of AIG, or Lloyd's of London, Both are surplus lines insurers. More than 2,000 of our policies are in Pennsylvania. Pennsylvania Insurance Commissioner Teresa Miller, in her recent letter to interagency financial regulators, states, "I would note that even with the increased surplus lines activities for residential flood coverage over the past 11 months, the Pennsylvania Insurance Department has not received a single complaint concerning a surplus lines carrier. The recent flooding in and around Baton Rouge, Louisiana, is the fourth most costly event in the history of the NFIP and was a good test case for the surplus lines private flood market. 381 of our private policies suffered flood damage totaling over $30 million. Our average time to settle a claim was 66 days. To the best of my knowledge, 0 complaints have been filed with the Louisiana Department of Insurance. I have included in my written testimony 2 of the many testimonials clients take the time to post on our website. One saving a client enough money to stay in their home, and a second offering to cook us dinner due to a positive claims experience. I urge Congress to pass the Flood Insurance Market Parity and Modernization Act that passed the full House of Representatives with bipartisan support during the last session. This legislation provides much-needed clarity to support the growth of a robust private marketplace. I thank the members of the subcommittee for allowing me to testify before you today. I wholeheartedly support your mission and offer you my continued efforts should you request them.
Thank you, Mr. Hec, and thank you to the whole panel for your testimony. The chair now recognizes himself for 5 minutes. Mr. Hec, as you mentioned, Mr. Ross has a piece of legislation passed in the last Congress. He's introduced it in this Congress, making it easier for lenders to accept private flood insurance. Do you think his bill will go a long way to helping us create a private market?
I do, Chairman. The bill does 2 very important things. It clarifies that surplus lines insurers would qualify as acceptable private policies. And then the very last paragraph of that bill talks about recognizing private policies as continuous coverage so that someone leaving the National Flood Insurance Program coming into the private marketplace would have the ability to go back into the National Flood Insurance Program with no penalty. Both of those would help a robust private market.
And so beyond Mr. Ross's bill, anything else you think we could do or should include in legislation that would help develop a private market? If not, that's okay. If this is the silver bullet.
I think that there are interpretations currently that FEMA is making that are detrimental to a private market. FEMA has taken 3 very specific actions just since we started writing policies that make it much more difficult. 1, they removed a cancellation provision. Previously, an NFIP policy could be canceled and replaced with a private market policy. Policies can no longer be canceled for that reason. Second, policies that are prepaid. So a FEMA flood policy, when it renews, the Write Your Own companies or the NFIP Direct issues renewal bills for those policies 65 to 70 days before the policy renews. Most policies are escrowed by lenders. When the lender pays the renewal premium, sometimes 60 days in advance, sometimes 45 days in advance, FEMA has taken the position that once that premium has been paid, even though the policy still has a month and a half left before it goes into force, the policyholder is no longer allowed to cancel that policy.
Does the private market work like that?
No.
No. I want to quick move on to a couple more questions. Roy Wright was testifying last week and commented that compensation for the Write Your Owns could be decreased. Do you agree with that?
I absolutely agree with that.
What would a competitive compensation be for the Write Your Owns, do you think?
We pay every one of our 2,000 agents a 10% commission.
How much?
10%.
10%, okay. I want to move on to the repeated loss properties. Mr. Terchunian, basically we have 85,000 properties that account for 24% of the losses of the NFIP, or basically 2% of properties account for 24% of the loss. Some have said, well, listen, if you're paying for a property's value 2 or 3 times, should we be taking some action to move them out of the flood program, or do we have to spend dollars up front to help mitigate these properties? But what do you think we should do with this smaller number of properties that account for such a large portion of the cost of the NFIP?
Well, that's classic across the board is how do you deal with this repetitive loss issue? And clearly, if you have that small a number of properties, I think you can focus an extreme effort into sitting down with each one of those property owners and trying to help them through the process of getting their homes elevated. I've dealt with a lot of property owners after the fact who are just thrilled with the fact that they got their house elevated. They're so much more comfortable. They're so much happier where they are after the fact, but you couldn't get them there before the disaster. We're talking about people who have repeated the same thing over and over again. I really believe that you need, in the same way that NFIP does it now, a carrot and a stick. Listen, we will help you, and this is the path to get it done. If you don't want to do it, it's going to cost you more money.
Okay. Back to you, Mr. Hec. Looking at new construction, if we stand up a private market, at some point in the future, whether we're 3 or 4 or 5 years down the road, any opinion on whether new construction should be allowed into the NFIP or new construction should be driven to the private market? And could the private market take those new constructed homes?
I listened to Mr. Wright come up with that suggestion. I don't agree with the suggestion. I don't know of a way that you would make it mandatory for the private market to insure those properties. If they're not eligible to be insured in the National Flood Insurance Program, how can you guarantee that they're going to have coverage at all?
Then should they be built?
I think you're talking about something that's already built, or...
No, I'm talking about new construction.
Right. So you mean you'd need to have flood insurance prior to getting a building permit?
Well, we'll circle back. My time is over, and I want to be respectful. I'm now going to recognize the gentlelady from New York, Ms. Velasquez, for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Cleaver, for allowing me to go next, Ms. Waters. Ms. Luckman, you and I agree a policyholder should have advance notice of an adjuster or engineer who is coming to inspect a flood claim and be provided with an opportunity to veto and request reassignment. I have included this idea in my legislation, H.R. 1423. Can you explain why this reform is necessary in light of the fraud and underpayment of claims that took place after Sandy?
Yes. In light, what happened after Sandy was we saw the same bad actors repetitively, hitting multiple homes on the same block, and they weren't punished at all. I think that homeowners should have advance notice of who's going to be assigned to their claim with a reasonable opportunity that they can research that company, see if they were connected back to Hurricane Sandy fraud, see if there's some other type of fraud. And what we've seen working at the clinic is that a lot of this information is available online. So I think it's only fair that a homeowner has a reasonable opportunity to look into those adjusting and especially engineering companies. An engineering report can make or break a flood insurance adjustment when you're talking about a foundation. So they should absolutely be provided with that right.
Thank you. Ms. Luckman, following Sandy, a number of New York policyholders who had been denied coverage or suspected their claim had been underpaid felt they did not have the financial resources to assert a legal claim against the right Hurons. In response, my legislation provides for the reimbursement of legal fees and litigation expenses for prevailing policyholders. Do you think the reimbursement of legal fees and litigation expenses will level the playing field for policyholders against the right Hurons and empower them to pursue a potential claim?
Yes. Reimbursement of legal fees would be a huge advantage for homeowners. My clinic, we're state funded. We're permitted to cover all filing and litigation costs for our homeowners, which can run upwards of $800 to $1,000. Many of these homeowners who were shortchanged immediately post-storm, they did not have those funds to go into federal court and to pay those fees. So if a homeowner knows that they've acted in good faith, they've submitted a claim, they've gone through the appeals process, and they are still being improperly underpaid, if they know that they can have legal costs reimbursed, it will level the playing field. And I think that, quite honestly, it would put some skin in the game for the Write Your Own carriers, who right now, they're not at any loss. You know, unfortunately, the federal government covers their legal costs, and there's no one left helping these homeowners with their litigation costs.
Thank you. And my last question, Ms. Luckman. Following Sandy, a number of policyholders voiced complaints regarding the coverage they thought they had versus the coverage they actually had. In response, my legislation, H.R. 1423, calls for a disclosure document, an acknowledgement document to accompany the purchase of a standard flood insurance policy. Based upon your work with Sandy victims, will these documents provide policyholders with a better understanding of what is and is not covered under the flood policy?
Yes, absolutely. A separate acknowledgement that a homeowner and a sales agent would have to execute at the time that they take out a national flood insurance policy would absolutely make them more educated of what their coverage is on the home. What we saw after Sandy was a lot of litigation from homeowners against their sales agents. They were really not aware of whether they had contents coverage, whether they weren't, whether they didn't, what the basement limitations were. Many homeowners, unfortunately, were carrying $250,000 of structure coverage when maybe they didn't necessarily need that coverage because they didn't have a mortgage. And we saw a lot of lawsuits filed against sales agents. So I think a separate acknowledgement form would protect everybody. I think it would protect the sales agent selling the national flood insurance product. I think it would protect the homeowners, so at least that they're on notice, that they're aware of what their policy says and what their true coverage is. And I think it would result in less litigation, which would benefit the national flood insurance program.
Okay, thank you. I yield back.
The gentlelady yields back. The chair now recognizes the vice chair of the committee, the gentleman from Florida, Mr. Ross, for 5 minutes.
Thank you, Mr. Chairman. Mr. Hec, I appreciate your testimony because it seems to me that what your insurance company is doing is that they're actually assessing the risk independent of FEMA. Is that pretty accurate?
Accurate.
And in that assessment of risk, you look at how they've looked at the subsidized risk as opposed to the actuarial adequacy of the risk. And it appears as though, and according to your testimony, that the bad risks are really being accepted by the private market. Is that also correct?
Correct.
And in defining your rate, and not asking you to give up anything proprietary, but in defining your rate, you look at factors, or would you look at factors other than just elevations and mapping that FEMA does?
Yes.
In fact, you probably get a little bit more granular, don't you?
Yes.
Because your capital is at risk, is it not?
Correct.
And you want to make sure that you do what's right not only for the consumer, but also for the capital that you're trying to protect.
Correct.
Which is why we call it insurance, because it's risk management and not relief, which is what I think a lot of people expect when they pay subsidized policies, is relief instead of insurance. And getting back to insurance, what incentives do you offer for mitigation, if any?
We do not have a mitigation offer at this point. We do have credits for deductibles. We do have credits for.
So you do deductible. You can have different various deductibles.
We do. We also give credit for insuring a home fully to value.
So you go over the $250,000.
We do.
And you do your own claims management too, don't you?
We do.
So you've got over 2,000 agents selling, and you've got your own claims management, and you testified today that you can resolve, in one case, you resolved all those claims within an average of 66 days, which is pretty phenomenal, isn't it?
66 days was satisfactory, yes.
Okay. But you're the private market, okay, which is why we need you. And we talked about the Flood Insurance Market Parity Act, and I appreciate your comments on that, and I appreciate the chairman's comments on that. Would it not be appropriate to get this put into law sooner than the expiration of the National Flood Insurance Program at the end of September?
It affects us every day, Congressman. It would help us if it were passed immediately.
And not only would it help your company, but would also help the consumers, and it would show to this Congress that the private market not only has the capacity, but the appetite to enter this flood insurance market that is affordable and available to all consumers.
I'm an advocate of your legislation.
Thank you. Let's talk about something else. One of the things that Roy Wright testified to last week was that 50% of those that are receiving policies that are in mandated flood insurance zones let their coverage lapse, and there seems to be no enforcement. Does anybody on the panel have a suggestion as to how we maintain continuous coverage so we don't have a lapse in coverage and an even greater liability to the National Flood Insurance Program? Ms. Luckman, I'll start with you.
And with regard to coverage lapses, I think that homeowners need to be aware of the renewal time frame, and I think that better notice needs to go out to them. I believe right now they get a 90-day notice.
And that's a notice from FEMA, right?
Right. I believe that that's a notice that has to go from the YOs if they have a right your own or the NFIP direct servicing
And it should go to additional insureds, should it not, such as the mortgagee?
Absolutely.
And there should be an enforcement of that, should there not be?
Absolutely.
Okay. Yeah.
Thank you, Mr. Ross. I think your question's dead on point. We all get mortgage statements, and associated with that is the homeowner's insurance. And if you don't have it, the bank gets it for you and bills you. I don't see why we can't do it the same way with flood insurance.
I agree, almost like an escrow.
Exactly.
I mean, at least we know we maintain coverage.
Exactly.
Mr. Berginnis?
This has been a recognized and an issue within the program in every reform, at least since 2004. I might suggest that at least there, when you look at the buckets of the mandatory purchase, you certainly have the regulated lenders, but you also have direct agency lending, and then you also have kind of this thing that's over here where folks that receive disaster assistance are supposed to purchase and maintain coverage as well. And at least in those later two areas, we really do kind of question the amount of oversight that's being exercised right now.
So we need greater oversight of the continuous coverage.
Yes, sir.
I agree with that. Mr. Hecht, any suggestions?
I think the percentage of penetration of mandatory purchase is understated. There's a robust lender-placed force-placed flood insurance market, and I believe that that's where a lot of those policies are.
So would the force place be through the private market, or would it be through the NFIP?
It could be through the NFIP, through the MPPP program, but 99% of it currently is in the private market.
I appreciate that. My time's up. I yield back.
The gentleman yields back. The chair now recognizes the ranking member of the full committee, the gentlelady from California, Ms. Waters, for 5 minutes.
Thank you very much, Mr. Chairman. I really do believe that we need to have some major changes in the National Flood Insurance Program, and I am absolutely focused on the debt and trying to understand why it is that we have a $25 billion debt that we're paying $400 million a year interest on that debt, a total of $6 billion in principal and interest since 2006. And if I understand correctly how the program operates, when FEMA needs money because of the catastrophes that we have to go to Treasury and we have to borrow the money. And so we're paying interest to the Treasury, and we go back and borrow from the Treasury, and we have a $25 billion debt, and we have this relationship that doesn't make good sense to me. I want to know from Mr. Berginnis, don't you think it's time we forgive this debt? And if we forgive the debt and we were not paying this interest, couldn't we put that money into mitigation? What do you think?
Yes, Congresswoman, absolutely yes. In the history of the program, I think it's important to recognize that the program as designed was not designed to deal with a catastrophic loss year. And in fact, in the 1980s, there were a couple times that Congress did forgive the debt in the program. But then from the late 1980s to 2004, the program operated as it was designed to. Of course, we had the Florida hurricanes and Katrina, and the debt skyrocketed from that point. One of the points in our testimony is that had Congress forgiven the debt at the time, And I believe the debt was about $18.5 billion then. Then there would have been resources available, likely in Sandy and even in 2016, to pay the claims that we have. This issue of not dealing with the debt, not only do we need to address it from the standpoint of the current program right now, but we need to have a longer-term framework to deal with catastrophic losses. Because even though FEMA has implemented the financial risk management tools that Congress has required of it, I'm still concerned about these catastrophic events.
Okay. As I understand it, there are several ways that mitigation is done. Some mitigation is done by FEMA, some is done by the Corps of Engineers. And I think I've talked to some locals down in Louisiana at one point when I visited about them participating in mitigation efforts. How does this all work? Does the Corps of Engineers work with FEMA to make some determination about what mitigation can be done and where?
It works in a variety of ways. Typically, larger mitigation projects for bigger communities, communities will tend to work with the Corps of Engineers a little bit more. They can work with them exclusively. But the FEMA mitigation programs are available across the country to communities large and small. So we tend to see that smaller communities would tend to utilize the FEMA mitigation programs. There are some cases where the mitigation project may implement several different kinds of methods, and you actually match funding for multiple programs and then supplement that with local resources. So it really can vary widely across the country, but that's also why we need the different authorizations for mitigation.
Lastly, I want to ask, I think there's something that I agree with Mr. Duffy on, and this is quite unusual, but I understand he may be interested in limiting development in floodplain areas. I think I agree with that. What do you think?
So one of the original purposes of the program was to steer development away from high-risk hazard areas, and it's the one unfulfilled part of the program itself. And so to the extent that the program can help make that a reality, would definitely agree with that.
Thank you. I yield back.
The gentlelady yields back. We agree on more than just that, Ranking Member. The chair now recognizes the gentleman from California, Mr. Royce, for 5 minutes.
Thank you, Mr. Chairman. Mr. Hec, you testified that, of course, no private market provider will choose to write FEMA's severe repetitive loss properties. And really, that's no surprise, because repeatedly flooded properties make up 1% of those insured by NFIP, but it represents 25 to 30% of all the flood claims. And so they're not a good risk for private insurers or for the American taxpayer. And today, Congressman Blumenauer and I introduced a bill, H.R. 1558. This is the Repeatedly Flooded Communities Preparation Act. And the concept here is to proactively reduce flood risk instead of continuing our current model of rebuilding these properties over and over again. The way we do it, and let me just give you by way of example. We've got a couple of cities here, Tulsa and Charlotte. Both have had very pronounced success in decreasing flood risk, because what they did was proactively take on a plan for stormwater management. That's the first thing they did. Promoting voluntary buyouts, sometimes that can be effective. Reviewing new development proposals for flood impacts every time one came up, and steering development away from risky areas. So that's part of their plan. Many of their peers, though, many of the other cities and communities have not kept up with that kind of approach. So what this bill would require is that communities with a large amount of repeatedly flooded properties to implement plans, to have that city council or those counties put forward that plan for lowering flood risk, and then in terms of keeping the records, holds them accountable for failing to act. That's what the bill does, and I would just ask for thoughts on this issue, and I also would ask Mr. Hec a follow-up question here that I wanted to get to, and that's, do you think the home buying public truly grasps flood risk? Is this registering with them? Do they understand how subject to hazard their property is when they talk with their realtor? Do they understand how flood risks change over time when areas nearby are developed or when a forest fire might occur? And so maybe I could ask the panel also on that aspect about recommendations for how we can change this lack of education on flood risk. Besides just what we could do at the county level or city level, how do we improve take-up rates for flood insurance and strengthen these mitigation efforts?
Let me address both of your questions. My statement that, of course, we would not want to write severe repetitive loss properties is a statement that we would not want to write severe repetitive loss properties at rates that were competitive with FEMA, because FEMA charges much too little for the severe repetitive loss properties. The Wharton study last year regarding consumer recognition of flood risk, consumers actually overestimate, per their study, consumers overestimate consumers think their property is going to flood more than it actually does. They overestimate that, but they underestimate the amount of damage that an actual flood would do.
Mm-hmm. Other members of the panel want to jump in on that?
Congressman Royce, we've taken a look at the legislation that you and Congressman Blumenauer have introduced, and actually what we're supportive, and one of the things that we like about it is that it does have a measure of accountability under current law, which comes from the Stafford Act. Community mitigation plans are required to at least assess how many repetitive loss properties there are, but it doesn't really require them to do anything about it. And so I think the innovative element to this legislation is that it does have some requirements there to actually do some planning and actually mitigation of those or face some potential consequences. In terms of the broader education and awareness of risk, and I go back to a statement I made in my testimony, we've got to, first of all, map all of these areas in the country. Oroville Dam, I think, is a great example in California. 200,000 people evacuated, far beyond what the mapped floodplain showed, yet how many of those people knew that they were in a dam, basically either a dam failure or a dam release inundation zone? Probably none of them, because that information, while it has been produced, it's not publicly available. And that's a particular
Thank
issue.
you. I thank the panel. Our time's expired, but transparency is part of this answer. Thank you very much, Mr. Chairman.
The gentleman yields back the chair now recognizes the ranking member, the gentleman from Missouri, Mr. Cleaver, for 5 minutes.
Thank you, Mr. Chairman. Ms. Luckman, thank you for being here. Ms. Velasquez was talking about how helpful you had been to her community after Sandy. And she assured me that if I asked you this question, you were going to answer it in the fashion which I wanted. We are seriously, and I think the chairman of the subcommittee would agree, we're seriously dealing with the issue of mapping and mitigation activities. And so when we learn today that the president zeroed out in his budget discretionary appropriations for NFIP's mapping and mitigation activities, because we think that it would be devastating. What do you think we can do to enhance the program if it is zeroed out?
I think this really goes back to education. I think if that unfortunately is the end result of his budget. I think that we need to look to other sources of education that would or could appropriately advise a homeowner or a policyholder of their flood risks. Something that my statement speaks to is NFIP certified agents. So I think that if you have a standardized education that's required by the NFIP, that information can be given to homeowners up front. I think that would at least provide them with the same information that mapping and risk evaluation would.
Well, but it wouldn't, they're going to still have a serious problem, homeowner problem, but.
I think the only way to reduce that problem would be to increase ICC, maybe the scope of increased cost of compliance, maybe allow homeowners to mitigate now. Instead of waiting until post-disaster, being able to mitigate their properties pre-disaster, I think would at least put them in a safer spot that would raise them out of the flood zone, the immediate flood zone.
Mr. Terchunian, none?
Well, on that same question, I think FEMA has come a long way in their mapping program. I'm a user of that program, and my clients use it and call me up and say, I looked at my property, and we start talking about the level of risk. That being said, they just like in broadband, they need to go the extra mile. And I think that's an important aspect of bringing both the education component but the actual mitigation component to the individual policyholder.
Well, I think probably there are a number of federal agencies that use FEMA, use the mapping. They don't help pay for it. And now nobody's going to pay for it if this is approved. Is this disastrous, Mr. Hec?
Ms. Cleaver, as part of my written testimony, I suggested, similar to Senator Warren yesterday, some of the other panel members, that private policies are assessed a fee, the same policy fee that the federal policy has, and that we remit that money to FEMA to augment the money that you have for the mapping. The private market is going to use independent mapping, but we're also going to have to rely on your mapping because of the mandatory purchase guidelines. So I'm a big supporter of our participation in your effort.
In your testimony, Mr. Terchunian, you mentioned that the cost of elevating a home in Long Island is between $100,000 and $150,000, and I think everybody would agree, or most of us would agree, that elevation is the best way to mitigate against flooding. It is time-consuming and very costly. Is there any way we can improve homeowner mitigation efforts?
Yes, sir, Mr. Cleaver. I believe that we have to get ahead of the flood curve with these property owners. After the flood, there are so many different dislocations that occur, waiting for approval time, getting through the insurance process, and then having to go to a zoning board. If we can figure out a way to incentivize the property owner before the flood occurs, their life will be better, their policies will be better, and we'll be living in a safer community.
The gentleman yields back. The chair now recognizes the gentleman from New Mexico, Mr. Pearce, for 5 minutes.
Thank you, Mr. Chairman. Appreciate y'all's testimony today. Now, the National Flood Insurance Program was created in 1968 because we didn't have a private flood line, and it was trying to stop the tremendous losses to the taxpayer. Now, Mr. Terchunian and Mr. Berginnis, if I were going to kind of try to summarize your viewpoints, you all would sort of favor transitioning from a national flood insurance program to a national mitigation program. Is that correct? I hear a really heavy emphasis.
I'd have to say, at least 50-50.
Okay. Mr. Berginnis?
Yes, definitely increasing the mitigation component would be helpful.
So, Mr. Berginnis, on page 9 of your testimony, you talk about the $1.3 billion in mitigation and getting about 2,000 houses per year for 5 years. That's so is that all that the mitigation did, or is the the 1.3 billion spread out?
The 1.3 billion was spread out. I did not have the data from FEMA to calculate the total
So
amount.
the 2,000 houses are just kind of accessories. They're in addition to everything else they did, or is that the focal point?
The 2,000 was just for a certain time period where I had the data for that.
I understand, but I'm trying to get an approximate figure. Mr. Terchunian had said that it could cost up to 200,000, and if I divide the number of houses, 10,000, into the 1.3 billion, I get 130,000 per house, which falls into his category close enough for the discussion. So when I just do the math in my head, any idea how many houses out there that we need to mitigate?
So there are a lot of them out there. I think
A million?
we have in terms of
100,000? I mean,
well, in terms of repetitive loss and severe repetitive loss properties, we're probably talking about 160,000 houses.
160,000?
But that doesn't, those are ones that have repetitive loss claims. That doesn't mean that's all the ones that are actually at risk. There's a lot of older buildings out there.
I understand, but just trying to get
So
some
160,000
feel. If we're going to
would be
convert
the-
this into a 50-50 program, we need to know what it's going to cost us, because
Yeah.
you're not claiming that mitigation is going to stop the debt. In other words, if we were to pay off the debt completely, we're going to still owe debt in 3 or 4 more years, because we're not going to be able to get everything done at once.
Right.
Mr. Hec, do you have any policies up in that Long Island, or wherever Mr. Terchunian's talking about, 300 houses? Do y'all insure up in that Long Island area?
We do not write policies on Long Island.
Okay, how about down in the area, Katrina area, right there in the,
We do not write policies in New Orleans.
okay.
We do write policies in
Okay.
36 states and 2,000
I understand. Of course, I haven't investigated it, but what I was getting at, could there be an accusation by people who are critical of you that you kind of cherry pick through? Could you write a plan, just sitting here today, if we had enough time, could you write a plan that would ensure everybody up and down the spectrum in the flood map, or in the NFIP program, or is that too complex? Is that very complex?
We would be able to write policies at premiums, but the premiums would not be competitive with FEMA. And
Okay,
that's why we're not
kind of
writing
what
those
I'm getting
premiums.
at, right. Then, Mr. Terchunian, you state on page 2 about the 22 years. I know there have been 10 events in that area. Have any of them squared up right on that same area where this is a good analysis? Has the mitigation defeated an event similar to 1992 that's the basis of your testimony on the first pages?
Yeah, I would call Superstorm Sandy an equivalent event.
Close enough?
And,
all right, fair enough. That's good enough. Now, on page 5 in your testimony, you talk about, or page 6, that it's unreasonable to expect a consumer to invest $200,000 for an annual payback of $4,000 to $5,000. So you then would want the taxpayer to do it. Would it be reasonable that the taxpayer, if they subsidize this, that the taxpayer would get the first $200,000 if they sell their home? Because you're basically transferring value from people out in New Mexico who live in trailer houses. 50% of my constituents live in trailer houses, and you want us to subsidize them because it's unreasonable to expect them to do that for a $4,000 to $5,000 return in that area. My taxpayers are getting no return on it, and I don't know exactly how I'd go back and convince them that that is reasonable. The term snowflake in New Mexico in July comes to my mind. Thanks. Yield back.
The gentleman yields back. The chair now recognizes the gentlelady from Ohio, Ms. Beatty, for 5 minutes.
Thank you, Mr. Chairman Duffy and Ranking Cleaver, and to Mr. Chairman and Ranking Member Waters. First, let me just say thank you to all the witnesses here today. This is a good day for me because I heard my ranking member and Chairman Duffy agree that on something we should do. And that just has inspired me so much that I know if I would ask
Would the
all of
gentlelady
you...
yield? I don't know that I've agreed to anything here.
I'm doing this really for the chairman. not the subcommittee chairman, the chairman at the end. So I'm going to say some really nice things today. And I think you will agree with me that obviously September is not that far away, and we certainly, so you're nodding already, we certainly want to get this reauthorized. It certainly sounds like there are enough things that if we work together on, I think we could make this happen. Would anybody disagree with that? Okay, and you're all experts. So our experts, Mr. Chairman, are saying we have a lot of good things on both sides. Now, I'm from Ohio. I know we have an expert from Ohio. And so when I think about, in my conversations with Ohioans, there's a perception amongst some of them that the floodplain was expanded to subsidize higher risk policyholders in maybe states like Florida or Texas. And I think many members of this committee, including myself, would like to see the private sector play more of a role in the floodplain insurance marketplace, because it could be especially beneficial to the pockets of Ohioans who are required to buy flood insurance. Now, I think my ranking member kind of posed this question to you, Mr. Hec, when Mr. Cleaver was giving his remarks. My concern is somewhat in the same light. And my question for you is, if we see private insurers take market shares from the NFIP and the proposed budget cuts to FEMA materialize, what would happen to FEMA's budget and mapping and mitigation under this scenario?
Well,
Now, I'm going to go to Ohio first.
Okay.
I want him to either expand on what you were saying or agree or elaborate.
Well, as I have included in my written testimony, the floodplain management function, again, that's technical assistance to states, to communities, the FEMA staffing, and the entire ball of wax is 100% paid for through that federal policy fee. And so if we go from, let's say, 5.5 million policies that we had in the program to, let's say, 3 million, that's a significant reduction. Half of the mapping budget comes from that same federal policy fee. So again, the reduction would be significant. On the mitigation side, one thing I would point out is that ICC has its own policy surcharge, so it's kind of on a per policy basis, so it's not as sensitive to that, other than I think the fact to point out that if we do work to expand private insurance, that we would strongly recommend that one of the coverages that needs to be in place for private policies, especially in the A zones where codes are required, is something similar to ICC like ordinance and law coverage, so that the property owner can access additional funding to mitigation. Finally, the Flood Mitigation Assistance Program is 100% funded through premium dollars. So again, a substantial reduction in policies equals a substantial reduction in FMA funds.
Thank you so much. I have a little less than a minute. So, Ms. Luckman, what would be the one thing you would say to us, since in your written testimony you said you'd like to see it reauthorized, you were very clear with that. What would you say to us to help us get there on time? Some of your colleagues have also said they didn't want to see it extended or short-term ranges. What would you say to us?
I do think it needs to be done in a timely manner. I think there's a lot of very minor administrative tweaks that I've spoken about that can be made very quickly. There's no cost associated with them, and it would really just help the program run more smoothly. And I also think that when we start looking at the relationship between the NFIP and the right-to-own carriers, if we look to maybe implement some additional penalties the NFIP can enforce against the WIOs, or just bad actors in general that have been involved, whether they be adjusters and engineering firms, I think that it would expedite the process. I think that there would be safeguards in place for the NFIP and for all included agents.
The gentlelady yields back. The chair now recognizes the former chair of this subcommittee, now the chair of the Financial Institutions Subcommittee, Mr. Luetkemeyer, 4 or 5 minutes.
Thank you, Mr. Chairman, and thank the panel today. It's a great panel. You guys are very, very informative, and appreciate your being here. Mr. Heck, quick question for you. We had a great discussion so far on private sector involvement in flood insurance. What do you see as the capacity for the private sector to get involved? How much more? I think Mr. Berginnis a minute ago said 5.5 million policies in NFIP. How many of those do you think the private sector can absorb in, say, 5 years' time? If there was an ability to be, for instance, Mr. Ross's bill would pass and there'd be able to be parity with the policies.
That's really a question for the capital markets, not a question for the distribution system. We currently, we've written 18,500 policies. The capital markets that have provided us with capacity, we would be able to maybe double what we have written so far. At that point, we're going back to the capital markets and asking which other capital markets would like to provide capacity.
Okay, as a private insurance company, you have reinsurance, I guess.
Now, I am.
Or you're the agent.
I am not the. Yeah, I'm an administrator. I'm a program administrator and a cover holder. So I'm not the insurance company.
Okay.
So Lexington Insurance Company, part of AIG, they have reinsurance. It kicks in at a $1.5 billion level. Some of our syndicates at Lloyd's of London have reinsurance that participates as low as $1.5 million. So that's 1,000 times difference in terms of a factor of 1,000 in terms.
The reason for that is some can absorb the risk and others can't, or is
correct?
That, okay.
Correct.
Mr. Berginnis, you were talking quite a bit about mapping, and it's been mentioned here already today that the president looks like he's wanting to zero out the mapping efforts here. One of the ways that I think, and what we're suggesting here, that we can solve the problem, is that if we allow the private sector to the local communities, whether it's city, county, subdivision, where it may be, to be able to map their own area. I mean, today's ability of these communities to get this mapped is not within their ability to pay for it because of the cost has come down so much. Is that something that could be done if you had a certain level of criteria there that would allow the local communities to do that?
So states and communities can actually do some of their own mapping right now under the FEMA program. It's called the Cooperating Technical Partners.
Right.
And sometimes, like at the state level, they'll actually do it in-house, but they can also contract with the mapping and modeling community that does a great job with that. One of the things I would say, though, is that we are seeing the costs coming down. And one of the things that the FEMA flood mapping program, I think that's a credit to them, is to take advantage of those latest technologies as well as experiment with those cheaper costs. The chair of our organization, Seal Strauss from the state of Minnesota, they're a CTP. And they are currently doing some large-scale mapping in rural Minnesota for as low as $200 a stream mile. To do a detailed flood study, we're probably talking about...
Okay. Very good. Well, I have one more question I want to get to before my time runs up here. I want to go back to Mr. Heck. You were talking a while ago about actuarial rates. I know that Mr. Ross is from Florida, and his state went to replacement cost rates based on the value of the home, such that if you had a $50,000 house, you'd be based on the cost to replace the house versus a $250,000 house. How would that structure work for you in your policies, you think?
I'm really not sure that I understood that question. In terms of,
do you settle claims on actual cash value or replacement cost?
I'm sorry. Our policy is identical to FEMA's policy. It's word for word. So there are certain structures that qualify for replacement cost, and there are certain policies that qualify for actual cash value.
Okay, with regards to the rates, what about, how would it affect the rates if you went to replacement cost rates and availability of that sort of coverage to the insured?
The actual cash value settlement reduces claims by approximately 22%. So the rates would go up approximately 22% again, on just those properties that are currently written at actual cash value, about 60% of our policies qualify for replacement cost, the same as the National Flood Insurance Program.
Okay.
Commercial properties are at actual cash value, non-owner occupied residential structures are at actual cash value. Those are the ones that you're talking about.
Very good. Thank you very much. My time is expiring. Thank you, Mr. Chairman.
The gentleman yields back. The chair now recognizes the gentleman from Michigan, Mr. Trott, for 5 minutes.
Thank you, Chairman. I thank the panel for their interesting testimony, and I want to ask the entire panel, and start by Mr. Hec thanking you for your comments, because it gives me confidence that the private sector can fill the void that we are hoping to solve by making this program sound. But my concern is 1.6% of the policyholders, so roughly 85,000 people of the 5.1 million, account for 24% of the claims. And so any solution has to deal with creating an actuarial rate that's going to make the program solvent. I'm interested in your comments on how we can transition to that without creating sticker shock for the homeowners, and how we can do it without disrupting the real estate markets by causing the premiums to become unaffordable.
Well, I think anything, the rates for severe repetitive loss properties have to be coincident with the risk. If the policyholder is not going to pay for that risk, then it has to be dealt with in some kind of an entitlement program mode. The insurance companies are not going to subsidize that risk. The risk is what the risk is. We are not going to compete at the rates that FEMA is currently charging for that 1% of the policies.
Other panel members?
One of the things that we suggested is a mitigation surge. Maybe we're a one or a couple year appropriation to actually take care of those properties, mitigate those to where the flood insurance would be less expensive.
But to that point, though, and Mr. Terchunian, you commented about the cost of raising a home, $100,000 to $200,000, and you'd commented, one of you, there's 160,000 properties potentially in that category. I mean, that's $160 billion, right? At $100,000, let's round down and call it 100,000 instead of 130 or 200,000. If it's 160,000 properties, that's $160 billion. As an aside, since this hearing began, we've added $150 million to our debt, so that's a little footnote. I mean, is the mitigation really going to be part of any solution? Because that seems like a large number under any calculation.
Well, the answer to the question is we're paying it now, but we're paying it in post-disaster dollars, which are much more expensive than mitigation dollars. So, it's pay me now or pay me later. That's the situation the taxpayer's in right now. And the gentleman from New Mexico is, why should they be subsidizing people on Long Island? We're doing it, and we need to stop doing it. And the way to stop doing it is when you have is to take, 85,000 homes sounds like a lot, but it's not. On Long Island, on South Shore Long Island, in Mr. Zeldin's district, we're gonna elevate 4,500 homes in the next couple of years. Now, that was spurred on by Sandy, but that is a project that's been decades in the making. We can do this around the country if we boil it down to bite-sized pieces and take it on one at a time.
Anything?
Yes, I mean, I agree. I think mitigation is key, and I think it needs to be based on community resiliency. I think if you took communities one at a time, block by block, and if you mitigated those homes and elevated them, that we may be spending more money out of pocket right now, but it will definitely result in less flood claims down the line, less repetitive loss claims, and it would definitely benefit the future.
Ms. Luckman, as you're at the law school, how many people have you helped with their claims, navigate the claims process?
So through the claims process, we had 10 cases that we took through litigation, and we have just over 100 claims in the Sandy claims review process right now.
Okay. How many of those claims would you say would you saw abuse for the homeowners, or unfair result in terms of how they were treated?
All of them. I mean, we've received, between litigation and the Sandy claims review process, we're over $3 million that we've been able to put back into people's pockets. And we still have another 42 cases that need to go through that neutral level review in the Sandy claims review process.
Mr. Hec, so let's fast forward maybe 10 years from now. Let's assume the private sector is playing a greater role. interested, if we got rid of the non-compete clause, what impact that would have? And then long-term, if we came up with a model that dealt with the repetitive loss properties in a fair manner so people could be transitioned and not lose their homes because of increases, do you see a need for NFIP long-term?
I do see a need for the NFIP. The general principle of insurance is the distribution of risk. What the private market brings to the NFIP right now is a further distribution of risk. So if you whatever the percentage is, if the NFIP ended up with 80% of the risk and the private market ended up with 20% of the risk, it's spread so that the taxpayer is not on the hook for 100%, they're on the hook for 80% of a disaster.
Thank you.
The gentleman's time has expired. The chair now recognizes the gentleman from Pennsylvania, Mr. Rothfus, for 5 minutes.
Thank you, Mr. Chairman. Mr. Hec, I want to talk a little bit about your experience. I think $3.5 billion in coverage for 18,000 customers, approximately.
Correct.
So I guess you're one of the largest private flood insurers out there. As you noted in your testimony, there is an ongoing debate about whether private sector flood providers like yours would be prone to cherry picking as they begin to play a greater role in the industry. You seem to believe that cherry picking concerns are misplaced. Can you elaborate on why you disagree with this commonly held belief?
Yes, thank you for the question. The last actuarial rate review that FEMA reported to Congress was in 2011 in substantiation of the 2009 rates. When we look at that review, the policies that FEMA says are actuarial produced $121 of loss for every $100 of premium. It had a 121% loss ratio. Their actuarial policies had 121% loss. The subsidized policies only had 114% loss. The subsidized policies are a better insurance risk to value for the private market. That was as of 2009. That's why in my testimony what I did was I substantiated that the rates for subsidized policies have increased at a much faster pace than the actuarial policies. The subsidized policies are the policies that we now consider rate adequate. FEMA's worst performing category of risk was elevation rated A zones. For that 32-year period, the loss ratio was 163%. Their preferred risk policies, the loss ratio for that 32-year period was 133%. Yet their most hazardous classification of velocity, V zones, during that same 32-year period, the loss ratio was 47%. As a private insurer, I want to write risks that are going to have a 47% loss ratio, not a 163% loss ratio. We are not cherry-picking the risks. We think FEMA has it upside down.
Interesting. We've often heard at this committee that the private sector needs access to more NFIP data in order to expand its role in the flood insurance market. Could you elaborate on what types of data would be useful to firms like yours?
We do not have any granular level data now. Most insurance risks are written at an individual level. It does no good to know whether your high school class had 32 speeding tickets if you're going to underwrite an automobile policy. What's relevant is, does the driver that you're going to insure have a speeding ticket? FEMA releasing claims data on a community level basis does nothing for us to select risk.
You noted in your testimony that my home state's insurance commissioner, Teresa Miller, recently wrote that, quote, even with the increased surplus lines activity for residential flood coverage over the past 11 months, the Pennsylvania Insurance Department has not received a single complaint concerning a surplus lines carrier. Commissioner Miller's assessment suggests that private sector insurance providers can deliver a high level of service, maybe even better service than the NFIP. Do you believe that consumers are well served by the NFIP in its current form?
I think we can do a better job.
What are some of the common complaints that you hear from customers about their experiences with the NFIP?
On our website, we allow consumers to post testimonials, and 1, 2, or 3 consumers take their time every single day to tell us what we're doing right. And our rates are lower, our service is better, a live individual picks up the phone, a live licensed agent counsels them on what insurance they need. We're there to make changes on their policy almost instantly when they request a change. Our claims were settled in 66 days. We simply do a better job right now.
Thank you, Chairman. Yield back.
The gentleman yields back. The chair now recognizes the gentleman from California, Mr. Sherman, for 5 minutes.
Thank you, Mr. Berginnis. The President's budget request, which was released this morning, would completely eliminate discretionary appropriations for the NFIP mapping and mitigation activities. How's that going to impact those activities?
It'd be devastating. And the reason is that because mapping is the cornerstone of everything else the NFIP does, the mitigation, the land use, and even the insurance. And what will end up happening is that the inventory we have will begin to decay because flood maps do have to be updated periodically, and we won't be able to do new flood mapping.
And then how will that impact our ability to properly assess the risk, to discourage building where it's particularly dangerous, and to properly assess the amount homeowners and others should pay for their insurance?
It will degrade that capability significantly, and that degradation will increase over time as the maps get older. And that, not unlike the situation we had in the late 1990s, before the map modernization program, where Congress saw fit to invest more funding in mapping.
In your testimony, you recommended that private flood policies include a fee equivalent to the federal policy fee to help continue to pay for the floodplain mapping and floodplain management standards programs. I just want to clarify with you your proposal. Do you suggest that the fee apply only to policies written in special flood hazard areas or to all private flood policies?
Well, we would think that at a minimum, it should be associated with those in the special flood hazard areas, and kind of the hook to do that would be those needed to meet the mandatory purchase requirement.
Do you have a suggested dollar amount in mind that you would recommend as the equivalent fee?
Well, we call it the equivalency fee because it would be pegged at the same amount as the federal policy fee, so that the NFIP and private policies would be on the same playing field.
And what impact do you think this new surcharge would have on private insurers' appetite to enter flood market, the flood market? What about the cost to consumers of private flood policies?
Well, certainly there's going to be a sensitivity to cost on any insurance product, but I was actually quite happy to hear my fellow witness, Mr. Hecht, as the largest writer of private flood, recognize the value of the mapping and endorse the concept.
And what impact do you estimate the surcharge would have on emerging technology or innovation in the mapping field?
Well, I think it will have a positive impact, because when you have the resources to invest in mapping, you can investigate those emerging technologies. When you don't have the funds, you're essentially just trying to play catch up and really don't have the resources available.
The President's budget request also proposes to restructure selected user fees for the NFIP in order to, quote, ensure that the cost of government services is not subsidized by taxpayers who do not directly benefit from those programs. This sounds like the Trump administration may be proposing to have NFIP policyholders pay the full cost of mass mapping activities because Trump assumes that no one else benefits from those programs. Can you talk about how FEMA's flood maps provide benefits for people and communities beyond just the NFIP policyholders?
Yeah, absolutely. Actually, a colleague forwarded me a case study recently from the Louisiana flooding, where a person who was not even a policyholder was close to the Amite River, and their son was a realtor, and the son began to talk to him about the potential need to evacuate, and that there's these FEMA flood maps online. And after they looked at the flood maps and determined that the crest was higher than what the map showed, it showed that all the evacuation areas were pretty much going to be blocked. And so it helped that individual, non-NFIP related, actually evacuate, possibly saving lives and certainly saving property.
I yield back.
The gentleman yields back. The chair now recognizes the gentleman from New York, Mr. Zeldin, for 5 minutes.
Well, thank you, Chairman. And first off, just on behalf of my constituents and everyone on Long Island who cares very deeply about this issue, I want to thank the committee for the countless meetings, conversations, the emails, all the questions that have been asked just to understand the practical impacts of the NFIP on individual lives. This hearing is called Flood Insurance Reform, a Community Perspective. And this committee has focused a lot since I joined it a couple months back on getting the impacts on each individual committee. There was a lot of focus here today on mitigation. I would love to be able to take that to the next level. And if you wouldn't mind, Mr. Terchunian, I'll put you on the spot first. You mentioned how homeowners on the east end of Long Island or a community like yours, West Hampton Dunes, making investments in mitigation. An important goal is to get clarity from FEMA as far as what mitigation will lower NFIP premiums and improve maps. So taking this conversation to the next level, what is the most effective policy approach to make sure homeowners or municipalities who mitigate get a clear return on their investment? We are expressing our positions with regards to dollars that should be saved from mitigation. What should be FEMA's response as far as changing policy?
Well, I think there's two groups that are affected by that. One is the entire community that's in the floodplain and is paying flood policies, and it's the individual policyholder themselves. The FEMA rating process is reasonably opaque. I find myself often in conversations with the property owner, the private insurance agent, and we can't get the FEMA underwriter on the same telephone call with us to explain why things are being rated the way they are. That process needs to change and needs to become utterly transparent, because there's poor predictability, and I don't know whether it's because the rater is not hearing what's being said or it's not being communicated properly to them. But that entire process has too many layers. It needs to be much more direct so that the policyholder themselves, as Ms. Luckman said, understands what it is they're buying and what it is that they may want to buy. The second aspect of it has to do with the community rating system. The community rating system is a great idea. It says, hey, listen, if you do a better job than NFIP requires, we're going to benefit everybody in the community. The problem is the CRS is a difficult program, and there's a lot of criteria in there that, at least in my opinion, doesn't advance community resiliency, but you can't get to the next level without it. So I think that process, number one, the CRS process, needs to be simplified. I think it's too complex. And number two, small communities who don't have staff and can't afford to hire need to be helped through that process. And because CRS is one of the ways where you reach from the NFIP through the local community directly to the policyholder. Local communities send out tax bills once or twice a year. There's no reason that the people who live in the floodplain can't get a notice in their tax bill, but it doesn't happen unless there's a linkage between the NFIP and the local community.
And for anyone else on the panel, if you want to join in, is there anything that hasn't been said during this hearing of what FEMA should do to improve policy so that homeowners understand exactly what their investment in mitigation is going to return as far as a reduction of premium? Is there anything else as far as the FEMA end of things that we haven't discussed yet in the hearing?
I think one element is just increasing the level of property owner awareness of mitigation. It's been, in my experience and a lot of our members, that people don't necessarily know what to do necessarily. So they either talk to experts, maybe they talk to their floodplain managers, and so there really isn't a good mechanism right now to proactively educate property owners, even if they had the resources to do it, the fact that, okay, here's the risk and here's what you need to do to mitigate.
Well, and if in the days ahead, the weeks ahead, any additional insight on this mitigation component that wasn't brought up during this hearing to be able to supplement your remarks here in your written testimony, I certainly would appreciate it, I'm sure. Can't speak for everyone else, but I would imagine everyone would appreciate that insight. So thank you again, Chairman, for your focus on these issues impacting my congressional district, the greatest congressional district of America, New York 1.
The gentleman yields back from the second greatest congressional district in the country. The chair now recognizes the gentleman from Illinois, Mr. Hultgren, for 5 minutes.
Thank you, Mr. Chairman. Thank you all for being here. Again, this is a very important subject for all of us, but I want to address first question to Mr. Hecht, if I could. As you're aware, companies who write NFIP policies must sign a non-compete clause, which pushes those companies to the sidelines in terms of developing and offering private flood insurance policies. Two-point question, if I could. One, could you discuss how this could derail efforts for private sector innovation and participation in the flood insurance market? And second, would you support legislation that eliminates the non-compete clause now required by FEMA?
Let me answer the second one. It's easier. Yes, I would support the legislation. And the cause and effect, capacity is what the private market needs to take on a bigger share of the national flood insurance program. And the write-your-own companies, if they're precluded from participating in the private market, then you've taken that capacity out of the marketplace. There's no reason to take that capacity out of the marketplace. I listened to Mr. Wright's testimony to the Senate yesterday, where he described that his reasoning was that these write-your-own companies had access to proprietary data and that they could choose just the best risks and leave him with the worst risks. Again, the private market is going to write the risks that they want to write. It's not a matter, we don't necessarily agree with FEMA on what the right risks are, but that clause, that financial arrangement should be amended.
Thank you. Ms. Luckman, I wonder if I could address a couple questions to you. 60 Minutes did a story on the Sandy claims review process in 2015 in which homeowners were interviewed about falsified engineering reports done on their homes after Superstorm Sandy. According to the story, engineers found flooding to be the cause of structural damages only to learn later that their reports were changed by the insurance company, who, by the way, take on none of the loss risk as a write-your-own company. According to 60 Minutes, insurance companies have argued the reason the engineering reports were changed was to allow for a peer review process, standard practice in the insurance industry. First question, is it common for an engineering report to be changed without the knowledge of the engineer who prepared the report?
No, I don't believe that that's common practice. And if it was truly peer review, the secondary person reviewing a report would have also been a licensed engineer. What we saw, especially in the cases of high-rise engineering, is that Mr. Pappalardo, who recently the AG had pressed criminal charges against, he wasn't even a licensed engineer. He was just purely making changes to reports, rubber stamping them, and setting them out the door to deny damage.
What do you believe accounts for the inexplicable fraud in the claims process, especially adjusters and engineering reports? What accounts for that fraud, do you think?
First and foremost, I think the fear that we've heard from many adjusters that we work with, that if they overpay a claim, that there's that fear of audit, that FEMA may come back and say, why did you overpay the claim, whether it be $10, $1,000, $100,000. think that there needs to be put safeguards in place that there needs to also be an audit for underpayment. And I think if there was audit for underpayment, we wouldn't have seen nearly half of the fraud that we saw in the review process.
So maybe that answers my last question, but I'll ask it still. What do you think we can do to prevent something like this from happening again? Do you think that's the answer?
I definitely think there needs to be an audit requirement for underpayments. I think the messaging needs to be clear that there will be an audit for under and overpayments. Payments should be proper. If an adjuster is getting paid to adjust a claim, they need to adjust it properly. And if they're unable to do that, then they should not be allowed to participate in the National Flood Insurance Program.
Mr. Hecht, if I can go back to you, one last question with my one last minute. In your testimony, you mentioned a FEMA subsidized rate policy written in Illinois in 2006 for $998 that renewed this year for $2,525, an increase of 153% over 10 years. You go on to say that private market providers may choose to write FEMA subsidized risk. Is this policy in Illinois an example of where the private market could step in and provide better terms than the government? I'm eager to see private providers take on a greater role in the market, but I'm also a little surprised you can compete with government-subsidized policies.
Correct. Correct. The rate increases that FEMA has taken on subsidized policies has opened the door for the private market. We are the largest writer of private flood insurance currently. We do have competition. There are several other private market providers. All of them, to the best of my knowledge, are concentrating on writing FEMA's subsidized risks. It's not my company that's not cherry-picking that term. The entire private market is doing what we're doing.
Well, again, thank you all. This is obviously an important topic. We'll keep learning from you and hopefully having that ongoing communication. I yield back, Chairman. Thank you.
The gentleman yields back. The chair now recognizes the gentleman from Texas. I would just note that he's not on the subcommittee. That's why he goes last, but we welcome him here for his questions. Mr. Green for 5 minutes.
Thank you, Mr. Chairman, and thank you for allowing me to be an interloper today. I thank the ranking member as well. They're both friends, and I enjoy working with them. Mr. Hecht, you insure properties in some 36 or 37 states. I'm not sure which. I've seen the two numbers, 36 and 37. Do you insure any properties now, or have you ever insured any properties in Houston, Texas?
Yes.
If you've insured properties in Houston, Texas, you're familiar with the Memorial Day flood that caused over $100 million in damages, approximately. And you're familiar with the Tax Day flood that caused about $1.9 billion, depending on who's counting and how you count, in damages. Now, you probably also are aware of the fact that Congress has appropriated funds to mitigate and eliminate some of these damages. The Corps of Engineers has on its docket various projects that, when completed, would mitigate and eliminate a lot of these damages. The question I have for you is this. Given that we have these $100 million floods, some debate as to whether they're 100-year floods, but very little about the cost. Given that we have these floods and people are victims more than once in certain areas, and it's prognosticated that if we completed the projects that have been authorized by Congress, money not appropriated, we would eliminate and mitigate a lot of this flooding. Your policyholders who are suffering because the projects that we have authorized have not had appropriate appropriations, they have to suffer flooding more than once. Do you tell them that they should elevate, knowing that if the property, if the flood control district had the money to properly mitigate, they might not have to elevate? Are you following me, Mr. Hecht?
I'm following.
How do your property, your persons that you've insured, how do they respond to this circumstance, which is not entirely unique? There are other places in the country where similar circumstances exist. How do they respond to this?
There are other places in the country that similar circumstances exist. We paid $30 million for flood claims in Baton Rouge just a few months ago. That's a project that had already been approved. That project was approved 10 years ago and never came to fruition. Had the mitigation project, the floodplain management project in Baton Rouge, been accomplished, we wouldn't have paid $30 million. People wouldn't have had to have elevated their houses. They wouldn't have had to have moved out of their houses. They wouldn't have had to rebuild their whole lives. So I'm a big fan of mitigation projects.
And obviously, the people that you insure, they mitigate because they raise the level of their properties. That's a form of mitigation, isn't it, when they elevate their properties?
Yes.
Well, they are doing this in some cases because we're not appropriating the monies that we have authorized. And in Houston, for example, we need about $311 million. Well, that $311 million hasn't been spent, but after the fact, post-disaster, we end up spending hundreds of millions of dollars. There has to be a point wherein we do this thing called cost-benefit analysis that we're so fond of talking about here, and at some point we have to fund these projects and spend less on what we'll call the front end of the process as opposed to more on what we'll call the back end of the process. Are you in agreement with me, Mr. Hec?
I am.
Okay. Does anybody differ with me on the panel? Everybody agrees. Well, I'm going to move to do something quickly. I have some documents that I'd like to introduce into the record without objection, hopefully, Mr. Chairman. A resolution from the Harris County Commissioners Court, signed by all commissioners supporting reauthorization. A statement from the Communications Workers of America indicating that they would support the completion of these flood control projects. A letter from the City of Houston, signed by Mayor Turner, indicating that some 27,000 homes were damaged, 2,700 homes were damaged in the April 18th floods. A letter from the Flood Control District indicating that they could use the $311 million to help mitigate and eliminate. A letter from the Houston Partnership indicating that about $1.9 billion in damages were done when one of the floods, the tax day flood. A letter from the Houston Realtors Association indicating that the 2016 tax day flood caused 1,362 homes to be damaged that were within the 100-year floodplain. Mr. Chairman, I ask that these be added to the record.
Without objection, the documents will be included in the record.
Mr. Chairman, if I may say so, just in closing, I was disappointed to hear that the President was going to cut $190 million from the discretionary appropriations or NFIP. But I was also even more disappointed to learn that he is appropriating $4.5 billion for executive orders, one of which is to deal with a wall that Mexico is supposed to pay for. I yield back the balance of my time.
The gentleman yields back and is well over a minute beyond his 5 minutes. The chair now recognizes the ranking member, Mr. Cleaver.
Mr. Chairman, I have a communication from the National Association of Federal Credit Unions addressed to both you and me that I'd like to have introduced into the record.
Without objection, the document will be included in the record. The gentleman yields back. Now, I do want to thank our panel for their testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions to the chair, which will then be forwarded to our witnesses. I'd ask that the witnesses please respond as quickly as possible. Obviously, we're on a bit of a timeline if we want to get the NFIP reauthorized before its expiration. Again, I want to thank you for your time today and your testimony, helping this panel get up to speed on your experience so we can develop the best product possible in a timely manner. With that, and without objection, this hearing is now adjourned.